If you are a business whose sales is increasing, do you know how much cash you're going to need to keep your business afloat? So of course, the easy thing to tell you is to do a cash flow forecast, but that will take you hours, if not days of work. And it's not practical to keep redoing detailed cash flow forecasts on a regular basis. So I'm going to share with you my number one hack to help you ensure that you've got enough cash in your business to grow. So if you are interested in content just like this, make sure you subscribe to my channel and also check out my free Facebook group for businesses that want to grow. So as your sales number increases, it's inevitable that all of the numbers around it also go up. And that means that your costs go up too, and therefore your business requires more cash to support itself. So especially at the start of your business journey, it's very common for businesses to be funded by the owner. That's known as bootstrapping, where you use your own cash or personal finance, such as loans, to fund your business. But as the numbers get bigger, this becomes increasingly difficult. And that's why you need to be much more savvy around the finances in your business, and you need to have financial management skills to ensure that your business can keep on track and that you don't end up in financial difficulty. And no matter what size business you are, cash flow can be one of the most difficult numbers to keep on top of because there are so many variables that go into it. And you could spend hours, if not weeks, of your time doing a very complicated cash flow forecast for it to be out of date as soon as day one does not happen as expected. So instead, you need a very quick and easy way of knowing whether your cash is on track and whether you have enough to support the turnover that you're doing in your business. Now, it's actually a common trap that businesses fall into when they are growing, and it's known as overtrading. Overtrading tends to happen with businesses that have got a rapid increase in their sales growth. And overtrading simply means that you run out of cash. You don't have enough cash in your business to support its operations. And that's actually the main reason that most businesses go under in the UK, is that they run out of cash, and often they are actually profitable businesses. So if you can master your cash flow, then you stand a much better chance of having a successful business and earning money. So rather than looking at the number in your bank account or spending hours and hours doing complex cash flow forecasts, I like to use the cash conversion cycle, or also known as the working capital cycle if you're an accountant, as a much better indicator. Now, quite simply, the cash conversion cycle tells you how long it takes you to turn your services into cash in your bank. Now, this calculation is best suited to businesses that hold stock or maybe do manufacturing, but it can be used in any business. And in order to calculate this, you need to know three key numbers. Firstly, you need to know the value of your stock. You also need to know the value of your debtors, or any money that is owed to you by your customers. And thirdly, you need to know how much money you owe to all of your suppliers. So your cash conversion cycle is your debtors plus your stock less your payables. Now, why I really like this calculation is because it's actually quite easy to understand, and it's also easy to identify areas that might be a little bit out of kilter or somewhere where you need to have a bit of focus in your business. So for example, just by looking at these three numbers, we could see that if your stock was higher than your payables number, then that means that you are paying your suppliers for stock before you have sold it. And that, of course, is going to put quite a strain on your cash flow. And similarly, if our payables is much lower than our debtors number, then that's an indication that we are paying our suppliers before our customers have paid us. So just by reviewing these numbers side by side, it adds some context and allows us to see areas where we might need to deep dive and have a think about the impact that this is really having on our long-term cash flow. But back to the cash conversion cycle and how I think that businesses can use this, especially if they are growing. So I think that the easiest way to explain the cash conversion cycle is to convert it into days. So if we do this simple calculation here with the cash conversion cycle, what this tells us is that this is the amount of days that it takes us to convert cash in our business. And once you know this number, it tells you how many days you take to make money in your bank. So if you went and bought some stock today and maybe you manufacture it or it sits in your warehouse until you sell it to a customer and then that customer has paid you, that's what the cash conversion days are telling us, is how long it takes us to generate cash in our bank account. So when you know your cash conversion cycle in days, that's very easy to apply to your business. So if, for example, you are aiming to get to 50k per month and you have a cash conversion cycle of 60 days or 2 months, so you then know that you can extrapolate that out and say that you need 100k of cash in your business. And that's quite easy for you to then get your head around. So what is your bank balance at the moment? Has your bank balance ever been at 100k? Do you have access to extra financing such as loans or overdrafts, etc.? So the cash conversion cycle does have its limitations. So firstly, it is a snapshot in time and it's normally done on the last day of the month. So you do need to take into account that there will be peaks and troughs throughout the month. And so therefore it's not a guarantee that you will have cash and be able to pay for everything in your business. But what it is a really good indication if you have a viable plan and you have viable processes and procedures in your business that you can move forward with. So even if you are not a growing business, this is a fantastic measure to be using on a regular basis to keep track of all of the cash in your business. And if you are struggling with cash flow in your business and it's stunting your growth, then make sure you check out this video up here that gives you lots of hints and tips on areas that you can improve your cash flow in your business. And if you enjoyed this video and want more just like this, don't forget to subscribe to my YouTube channel and also join my Facebook group.